Check, check.
Good. We hear you. Good morning,
Here we go.
everybody. Good to see everybody. I am Mark Sebastian. I am your only option. I am the CEO and founder here of OptionPit.com, and I am joined by Hans Albrecht, our Director of Income Trading. Good to see you, Hans. We're here to discuss bank earnings. So in today's session, I'm going to just give you a brief rundown of what's happening with all the banks. Then Hans and I are going to do a little bit of a deep dive on what's next for the banks and why they may be primed to become even more profitable ventures than they already are. And then we'll wrap up with a little bit of action items and take your questions. So with that, let's dig in. JP Morgan, it's out. Their earnings were really good, and of course, it's down. Why? Well, let me go to the 1 year. You look at a 2-year chart and a 1-year chart, and you're not feeling so bad. The stock's up 42% year over year, and on the 2-year chart, and that's even with that blip in there. On the 2-year chart, you're getting on 100%. So the banks have had JP Morgan's had a really nice run. The stronger of the banks today is actually Citigroup, which has had a similarly great run. It's almost up 100% over the last 2 years, year over year. It's up $22. So, yeah, good for over 30%. And then the last bank reporting was Wells Fargo. Kind of disappointing here. They were just allowed to grow by the government, and they come out pretty flat. Now, again, has had a nice run. Year over year, it went from 57 to 79. It's a nice, even with the current. Prior to earnings, it was up at 84. So probably the best performing over the last year. And, maybe not the last 2 years, but pretty much in line. But with them now allowed to grow, I was a little disappointed that they didn't have a lot more to say. Markets as a whole opened up real strong and now giving it away. Not entirely surprised with a lot more earnings on the table. We're going to hit on that. Heading into tomorrow, we still have, I think, and Hans are going to talk about this one in some more detail, but we're watching Goldman Sachs really intently. They have their earnings tomorrow, currently pricing at about a 3% move. We also get hit with mini Goldman Sachs, although, sometimes called Morgan Stanley. And we wrap up with Bank of America, the owner of Merrill Lynch, and kind of the laggard over the last couple of years, and not kind of, definitely the laggard, and certainly the laggard over the last year. It's only up about $5 year over year. So, there's definitely something not exactly right with how that one is trading. Now, what is exciting about these banks is not that they're making a lot of money. It's the way that they're going to start making a lot of money. And to talk about that and how banks and AI, I know you're thinking banks and AI, is Wells Fargo going to put a fake teller behind the counter? No, they already have ATMs. How are they going to use AI to ramp up? Why are banks an AI play? And at first, I kind of thought the same thing. Why are banks an AI play? Then Hans kind of walked through what he was looking at, and now I'm a believer. So Hans, the JP Morgan earnings today pretty good, but of course, you have a run like that, they've got to be perfect. Otherwise, you're going to take it on you're going to get a little bit of selling. Yeah. What's your take on the earnings this morning? And then why don't you talk to us about what you see as this incredible growth opportunity in banks?
Yeah, so a little sell on news, as you said, Mark. These things have had a good run, and um, I think some of the benefits that we're going to talk about are a little bit more back end type stuff, sort of, backloaded. So these benefits haven't fully come to fruition from a reality standpoint, but I do believe that these stocks are, the Goldmans, the JPMs, are starting to build in some of that optimism, right? So they suffered when it was end of the world and tariffs were going to destroy the global economy, and then they've come back as we've seen sort of the flinch after flinch after flinch. And now they're looking to the back end of the year, which I believe is going to come with rate cuts. We see that inflation is kind of steady, but I do believe that at some point Powell's going to get the license to basically do what Trump wants him to do. And we've got the regulatory backdrop, which of course is one of the things that people got excited about in November around election time. Before the expectation bubble was burst a little bit into the tariff saga. So we have that, and then we kind of have this sort of other side of the AI play. So for AI, if anybody's been in Turbo Income or if anybody's sort of been watching me on shows, I've been very, very bullish. I've been saying, you want to get into these things because this is sort of that next phase, right? That next phase could involve markets starting to pick up on a little bit of a mania. And this isn't my first rodeo. I went through the .com, and it was something special, right? And we saw a little bit of that in 2021. Mark, you recall we had that kind of excitement where, with stocks going to 400 Ps and things like that.
Yeah.
So we do have these little pockets of excitement every now and then. And I think this one has a durability to it. And so the way that I'm looking at it is you want to kind of look at a little bit more the picks and shovels, right? You want to look at the people who are storing data. You want to look at people who are securing data, moving it, structuring it, trying to make sense of it. That's going to be a big thing. And then sort of, the end user is maybe a little bit more of a coin flip, right? Is Salesforce going to figure it out? Is Adobe going to figure it out? So that's maybe a bit more of the riskier side of things from my perspective. I want to invest in things that are going to be building this desire to get involved in the mania, right? They don't care. Gold Rush is, hey, I'm going to sell you the pan. I'm going to sell you the gold pans and the overalls and the tents and the supplies. I don't care if you find gold or not, but I'm going to sell you a whole bunch of these GPU chips, basically, and many other things that we're going to talk about when the time comes. So, but an interesting play here. Long story short, Mark, is that I think there's an interesting opportunity for the banks. And so they don't call these guys the smartest guys in the room, smartest guys and girls in the room, I think you had to say now, because they're not able to figure out how to extract every ounce of profit from everything they do. And we've been pushing this in Turbo Income. I've been saying, listen, I think this is an interesting play. Something like a Goldman Sachs is now going to benefit from those tailwinds that we talked about just a moment ago, and the deal flow that's coming. So companies have already raised 50% more in IPOs than they did this time last year. How does that make sense? Last year was a phenomenal year for stocks after 2024, great year. This year has been a gut punch at times, and yet this is starting to happen. This IPO business is starting to come in. Who makes money off those things? Can you guess who makes a lot of money off of IPOs, Mark?
I mean, I can.
I can.
What I'd like to know is, do you guys know who makes the most off of IPOs?
Of course, the founders, the people who have stock, apparently NVIDIA has regular folks in the company that are worth $20 million.
Oh yeah. I mean, Microsoft, same way. Bill Gates' secretary is worth what? A couple $100 million, right?
Wow. Amazing. So there's money to be made, and there's money to be made for us. And so if you think about it, the Goldman CEO said, look, an IPO process takes 8 people, a team of 8 people, 6 weeks, working hard, writing things down, number crunching, putting together documents. AI can do about 95% of that now. And so as I've joked about, and they said the last 5%, you got to have somebody take a look at this stuff, right? But the rest of it's kind of commoditized. So we're entering into this world where these guys are going to be using the full capabilities of AI. It's almost like AI compounded for these banks. It's maybe not so much the consumer, maybe not as much the consumer side, but these particular ones, like a JPM, like a Goldman Sachs, are going to be taking full advantage. They're going to be making money off these IPOs. They're going to be saving a whole bunch of money off of them. Just I think it was 2 days ago, they said they've implemented their first AI coder of competence, of reasonable competence. So you can bet they're going to be cutting costs. They're going to be finding efficiencies. And that is going to flow to the bottom line. So we have this amazing potential for huge deal flow, for IPO flow, for regulatory backdrop. And it's very much an AI play that I would say is almost safer than like a Salesforce, right? So I talked about the picks and shovels earlier. This isn't quite a picks and shovel in the same sense, but it is an area where they are going to facilitate the picks and shovels makers.
So let's before we jump in, let's kind of put this into a box so that everyone can understand. So we all know AI is making companies more efficient. One of the things about IPOs is the amount of paperwork, the amount of number crunching, the amount of deep dives you have to do on, their past analysis, forward analysis, due diligence is astronomical. Now, when you file an IPO, all of your numbers have to match. And one of the biggest things junior staffers do, you wonder what these people are doing that are working 90 hours at banks. They're looking at 15 documents, looking for discrepancies. They're looking for, they're going to, going through numbers and looking through discrepancies.
Grunt work.
That's where AI can really show its teeth. Let me give you an example. My brother happens to be the CEO of a very large company, and he's required to turn in about 50 forms into the government every year. He drops all 50 of them into AI and says, point out any discrepancies here among these 50 documents, and it can do it like that. That is something that a junior staffer would have worked a 90-hour work week in the past. So what does that do? Don't worry, they'll find other ways to make these people work 90 hours. Fear not, folks. But what it allows them to do is hire fewer junior staffers. You promote fewer people, and where they're going to save a lot of money is how many people do you need if AI is doing 90% of the work, 95% of the work? How many managing directors do you need in the medical IPO space, in the banking, in the fintech IPO space, in the tech IPO space? How many managing directors do you need? Who do you think costs a lot of money? Is it my wife's cousin that got hired to work for one of the big ones fresh out of college and was working 80-hour weeks? Or is it the dude that lives on the Upper East Side making $750,000, $800,000 a year plus bonus at some of these banks?
AI doesn't ask for a bonus usually.
Yeah. Who's the loser here? And the answer is not your recent college grad. I can tell you that much. So what Hans is saying is banks are going to be able to reduce their costs, speed up the rate at which they can go from new IPO client to ready to issue the IPO, and they're going to be able to do it cheaper. And that's where he sees huge opportunity among these banks. So is that a pretty fair assessment what I just laid out there?
Absolutely. You absolutely nailed it. These guys make probably, depends on the size of the deal. They can make 3 to 7%, maybe on a smaller deal. They'll probably make about 6 to 7% of the money raised, right? That's amazing, right? You sell your house, you kind of pay your broker, your agent too much. Well, these guys charge a whole bunch for doing one of these deals, and they have a bit of a franchise, right? It's not like suddenly, Joe Blow on the corner is going to go, wow, I see an opportunity to do IPOs for less money. No, these guys have the status, the level of expertise, and people are going to continue to go to them. And when Goldman saves, if they make 20 million on an average IPO, and they end up saving $5 million on cost, they're not going to call up the client and go, you know what, we're just such good guys, we're going to give you 40% of that back, 50% of that back. You know what they're going to give them back? 0%. 0% is their favored refund at Goldman Sachs, I'm pretty sure.
Yes.
And so that's going to really go to the bottom line. That's really exciting.
Yeah, and just remember, these guys may be the smartest people in the room, but more importantly, they're the greediest people in the room.
That's true.
And that we can say without a doubt. We're not always sure they're the smartest, but we're 100% certain they're the greediest.
We want to invest in smart and greedy and
Yes.
with guardrails, with a sort of franchise. That sounds like a pretty good place to be.
Yes. Yeah, William was asking, are deal commissions going to drop with AI? No, not until somebody tries to disrupt the space. And you know what happens when somebody steps in and tries to disrupt the banking sector? Folks, what do you think happens? Let's say Hans and I get together, me, Hans, Hannah. All right. It's HMH Partners. We build an AI engine that can get you to market on an IPO super fast at 20% of the cost. What do you think is going to happen to HMH Partners? Goldman's going to give us a knock and say, hey, how'd you guys like $250 million? And we're going to say, sure thing, Goldman. And then they're going to buy us. And then they will bring everything in-house and they will still charge their 6%. Now, if anybody actually goes to market with that kind of technology, I'd be buying it with both hands. But these guys don't continue to make more and more money because they're stupid. They are greedy and they see threats. I would say that's one of the core strengths of these banks. Maybe not when it comes to like the trading side, but when it comes to their moat, right? Do we all know what a moat is? A moat is what goes around a castle that protects you, right? I would argue like Google's moat is YouTube, right? They still have other areas they can get attacked, right? NVIDIA is the GPU. These guys have a moat across their ability to service, their ability to get you to market, a lot of different things. When they see a threat to that moat, they are really active. They're not always great around, selling, asset-backed securities and things like that. You just can't always trust them to when they're making a lot of money to on the trading side, you can't always trust them. But when it comes to their moat, they are extremely defensive and aggressive in defending it. So Hans, we've laid out. I think we've done a good job of laying out what's coming, and how the industry is changing. What do you do about it?
Well, you get involved with people who understand what's going on out there, understand where you need to be, and importantly, where you need to not be, right? So as I mentioned earlier, the Salesforces, the Adobes, look at these companies that I've had on my list of don't buys for a few weeks. They're all doing terribly. Fiverr, Upwork, Chegg is just getting crushed. So there's going to be disruption. So the way I look at things is I want to go to where there's the least disruption, and that's going to be picks and shovels. And I think you can get involved. I don't know, Mark, are we going to talk about this? But you can get involved very, very easily. And we're going to talk about all this very, very soon in terms of the 5 big categories that you want to be involved in when it comes to AI, because this is going to be less clear than a lot of people think. There are going to be moats. You mentioned that moat idea, Mark. There are going to be moats out there that become little streams, little puddles. And it's going to be a very, very dog-eat-dog world out there where people are feverish to get involved. And the people who pull it off companies that pull it off are going to do very, very well. And that's one of the areas that we really, really focus on.
Yeah. You have, there are some stocks that have very good moats. You've laid out several of them. If you want to hear kind of the full story on this opportunity, what I would do is invite you to join me and Hans on Thursday. We're going live at 7 p.m. and you are going to want to attend. What Hans is going to do is lay out the 5 stocks that, let me get that. He's going to lay out the 5 stocks you need to be involved with right now, and 5 stocks that you absolutely should not buy. This is key, right? There are a lot of companies that have done extremely well up until the last 6 months. You mentioned Fiverr, for instance. And with AI, you can kind of see this. There are companies that are AT&T or, Ameritech as cell phones were starting to be introduced, right? There are Searses out there that are going to get destroyed by Amazon. There are AT&Ts and Sprints that are going to get destroyed by Apple and Verizon. And there's so many of these names. The 5 names that Hans is watching, we're going to reveal on Thursday. We're going to talk about it. We're also going to talk about how you can take advantage of the incredible opportunity. So we're going to tell you 5 stocks we don't want to own. And we're also going to lay out the stocks that we really, really like. It's a great opportunity to join us. So click the link, join me and Hans at 7 p.m. Eastern on Thursday.
And we're going to be talking about, Mark, we're going to be talking about one of the most important charts that I am watching right now. A phenomenally important chart that is going to give us a preview into what is about to happen. And it's going to be really, really exciting if this one particular number gets surpassed on this chart. It's going to mean that it's game on in a very big way. And so in Turbo Income, we love income, and that's the sort of a specific kind of trade. But we also use, because I'm a degenerate gambler and I love upside, I look for strategic greed, right? We call that strategic greed. When the moment is right, when that moment is right, there are things that you need to do to really take advantage of a particular situation. And that's what's getting me super, super, super excited about this particular event coming up.
Yeah, and I can't wait to go through it with you. You and I have been kind of prepping around what do we really want to dig in, what points do we want to make across, and it's going to be powerful. So click the link, join us, and hop on board. So Hans, circling back to the opportunity within banks, the opportunity within financial services. Obviously, you have the big banks that are involved in this. Secondarily, where are you on some of the mid cap banks, the banks that are they're not the mega caps, but they're huge. Comerica, Fifth Third, Truist, and obviously you're in Canada. There are some Canada's banking sector is one of the most interesting banking sectors out there. I'm going to frame it that way.
Solid, very solid.
They're solid, and they're much bigger than you realize. There are no mid-cap banks in Canada. There is RBC, there's Scotia, there's BMO, there's Toronto Dominion. Who am I missing?
Yeah, your Royal Bank is the biggest, and then if there's a small one, they buy it, right? So we're very, very strict here, but there's this incredible sort of oligopoly power in these banks, and they're horrible to deal with. But man, do they make money? And that's the thing, right? When you have oligopolies and monopolies, your customer service can be terrible. But one thing we sometimes I often hear people complain about the banks, but one thing that people don't talk about is how, boy, if I've got my money somewhere, a Canadian bank is going to be where it's pretty safe, because these guys are such jerks and they're so careful that is the kind of attitude you really want for somebody who's keeping your money and your investments. So we like that part of it.
Mm-hmm. Absolutely. Yeah.
They're
No.
very cheap. They're very, very cheap, which means they're always a very important investment for Canadians. They're good banks. They're good investments. They tend to be good investments. And if we think, I'm kind of excited about them. They've had a good run back, but I think if rates are going to be coming down, that's an interesting place to be as well.
Yeah, I'm interested. RBC and BMO are obviously the two behemoths in Canada. Interestingly, the Bank of Montreal is headquartered in Toronto. That was from when and their U.S. headquarters is actually in Chicago, from when they bought Harris Bank. Those are kind of an under the radar play that on this AI space, because they basically own the Canadian IPO market as well. And between you and now you're going to say, well, Mark, what about the European banks? What about Credit Suisse and UBS and all those names? Why aren't you guys talking about them?
I think when you mentioned some of the U.S. ones as well, some of the smaller, mid to smaller, I think those are a little bit. I think you have to view those with a bit of trepidation, right? This is, I think, the opportunity is in trading, in deals, in IPOs, in the smartest guys and gals in the room. I think over time there may be some issues for those smaller banks. So I think we kind of get a nice honeymoon period, right? So I'll put it that way. I'll say that I think everyone benefits from cost efficiencies, from AI implementation, from rates going down, juicing the economy, and the positives that are going to come with that, regulatory wise, et cetera. If I had to own one for 20 years, it'd be something like a Goldman. It would not be somebody. It's kind of like looking at SoFi versus Hood. One's very personal loan. Like, do I want to be exposed to personal loans over the next 5 or 10 years? Probably not. So you kind of want to be a little bit careful there in terms of the kinds of financials you're involved in. So I'd say that, Mark.
Yeah. So there you have it, folks. We're kind of running up against it. Hans just laid out why these big banks are in a real position to win. Obviously, Goldman, JP Morgan. On my radar is probably Fargo, just because of their ability to grow. 15 years ago, I know we all think Fargo is junk now, but coming out of the financial crisis, they were roses. Everyone thought they were the best. Then they had this big mess. So that is one on my radar. Now, stocks not to own, you've got to join us Thursday, and Hans is going to lay out the names that he feels real strongly are the next Sears, are the next J.C. Penney and Macy's, are the next Sprint, and I'm talking old school Sprint or MCI or Ameritech, all the names that were basically destroyed by the cell phone business. And so if you want to get out of that, check your portfolio, make sure you don't have these. You have to join us Thursday. I pinned the link in the chat above us. It's also in the link, and I believe you can, check your emails, and we'll definitely have some emails out to you to join. But you don't want to miss this. It's going to be Thursday. There's literally nothing. Baseball's still on the All-Star break. So it's us or the ESPYs. I'll tell you, Hans is a lot more interesting than the ESPYs.
The Option Pit All-Stars. How about that? Exactly. It's our All-Star break. I'll leave you guys with one quick story. Kodak. I don't know if a lot of people realize this, but you talked about the telecommunications there. Kodak. Somebody within Kodak actually invented the digital camera, and they brought it to management, and they said, "This is the next big thing." And Kodak said, "Are you fricking crazy? You know how much money we make on film, on selling film?" And that was their downfall. So it's going to be very, very interesting out there when we talk about disruption. There are going to be those kinds of conversations over the next little while. 20 people in a department who are like, are we going to do something that hurts us or helps us, right? So you can imagine this sort of middle management at Kodak going, no, I kind of like my bonus. I don't want to switch and take a chance on something that might sell or might not sell. I'm happy selling film, and I'm happy with my
Right.
bonus each year. So this is going to be an interesting world, guys. And if you don't come on Thursday, you're going to miss the real meat and potatoes of it. And I'm really excited to present.
And I'm excited to present with you. So there you have it, folks. So today you learned about how banks and AI are interrelated, how they're going to make money, why we're really at the beginning, how they're kind of a pick and shovel play in their own way on AI. You know, how you can sense some of the losers without us really giving you these 5 names. And then we talked a little bit about some of the other areas of the banking sector that maybe aren't as interesting as these mega banks that are heavily involved in IPOs. Hans, thank you for your time this morning. Great to chat with you as always. You know, I always
Thanks, Mark.
love talking shop with you. And folks, we want to thank you for joining us this morning. Click the link in this chat to join me and Hans on Thursday at 7 p.m. Eastern time. So for our Imperial Overlord of Income, the head of income trading, he is Hans Albrecht. I'm Mark Sebastian. I am your only option. This was the state of the market. Have a good one.
Thanks, Mark. Thanks.